Also welcome on board Hemang Jani to join in the show and talk about what stocks he's liking and not liking. Hemang, hi, morning. Can't help but talk about Bajaj Finance first. The fact that the AUM growth in the second quarter update has come in above the previous guidance as well, so beating all expectations. You think a good time as any to add more to of Bajaj Finance in one's portfolio, given that it's valuation-wise quoting less than pre-COVID levels and the IL&FS crisis?
Yeah, good morning, Aisha. I think very strong business update coming through from Bajaj Finance across parameters, be it customer acquisition, the new loan growth, almost about 26%, AUM growth, again, much ahead of expectations. And Our sense is that, though valuations have been a bit of a concern for Bajaj Finance for a while, the fact is that in terms of delivery, in terms of asset quality and the overall operating parameters, Bajaj Finance has consistently delivered. Also, the recent fundraise that the company is undertaking would also help in terms of the book value. So, we continue to have a positive bias on the name. One should really wait for a bad day in the market when you see, correction. Let's say today morning, we are kind of staring at some, about almost 1.5% kind of a cut in the indices. So, whenever you see a bad day, I think Bajaj Finance one could surely look to add into the portfolio.
Okay, that's the day coming in on Bajaj Finance. Wait for a weak market day to buy into the stock or add positions further. Can't help but talk about what was going on in autos yesterday. Irrespective of a steady performance for the monthly sales data, the likes of Eicher fell 3.5%, Maruti was down over 2%, and similar was the case pretty much across the board as well. Hemang, you think the heydays of auto rally are behind us, or do you think one should only use days like yesterday's weakness to add positions into auto names?
I think we should bear in mind one is that this is just the beginning of the festive season, so the monthly numbers do not necessarily reflect the underlying growth that we could possibly have. And for many of the companies, particularly the two-wheelers and the passenger vehicles, the festive season accounts for almost about 40% of the total sales. So that is something that we should watch out for. Having said that, the monthly numbers, there was a bit of a disappointment when it comes to Eicher, Maruti, some of the tractor companies, Mahindra's tractors, as well as Escorts. Whereas we have seen TVS delivering decent set of numbers and also Ashok Leyland delivering slightly better than market expectations. So it would make sense to have overall positive bias in the sector with the particular names that we prefer within that be Ashok Leyland, Tata Motors, and Maruti. I think these are the three names that one can really go with.
All right, that's the view coming in on the entire auto space. In the meantime, also wanted to get in your take then, Hemang, as to what the outlook is within the entire banking sector. Just to the fact that there have been a slew of updates that have come in the likes of Bank of Maharashtra, AU Small, South Indian Bank, Yes Bank, etc. Have there been any standouts?
Business updates are reasonably good. I think particularly for the names like RBL Bank, we feel that the update was particularly very good, and one is getting the sense that the growth from here on will be very good, along with the fact that the valuations have been very supportive. So that is something that we should be looking out for. Also, banking and financial services, the quarter two reviews also start flowing in. And we think that this quarter should be reasonably good, particularly for the smaller PSU banks like POB, Can Bank, Union Bank, etc. So one should really watch out for pockets of performance were there. And as far as the large private sector banks are concerned, I think it's going to be reasonably okay. But because of the kind of sentiment which is around us and FI holding being at a higher level, I think HDFC Bank or ICICI Bank could go through a bit of an underperformance.
Let's revisit some of those stocks on the charts as well.
Commentary then, Hemang, as to how you're looking at some of the latest updates from Avenue Supermarts, a V-Mart, all of these within this space?
But there is a sense that now the growth is stabilizing, and the fact is that because of the larger format of the store size where the company is focusing upon, the overall growth in terms of revenue per square feet is showing much better traction versus what we have seen in the last 3 or 4 quarters. So, though the valuations continue to remain on a higher side, I think even the fact that slightly better growth has come through in this particular quarter, one should really look to add into this Avenue Supermart for, let's say, 1 year kind of a time frame.
Okay. Meantime, I was just curious to get in your take on Vedanta. Given the fact that there's been a lot of news and developments, the latest being the demerger, and reports are indicating, Hemang, that the lenders are unlikely to clear this demerger in a hurry because it is likely to reduce the fungibility of cash flows across the businesses. Of course, there are latest updates with respect to the aluminium production updates, etc. But how are you looking at Vedanta given the fact that in this year it's declined about 25%?
So when it comes to demerger, I think it looks like some kind of an attempt to divert attention from the core issue that the company is grappling with, which is at the parent company level. There is a gap between the amount which is required to honor the debt commitment versus the current cash flows, right? So I do not think that demerger by itself will kind of address that concern. Secondly, when you try to split up the companies into, multiple units, and since it's essentially a commodity-based business, there is going to be a challenge to deal with the cash flows of each commodity depending upon the cycle. So, I would feel that in the current macro situation globally and, to some extent in India, it would make sense to stay away from names like Vedanta and focus on some of the domestic oriented stories where you have a slightly better growth visibility.
Meantime, Hemang, what's the view when it comes to the IT sector? The latest JP Morgan report says that they are very negative on this space, largely owing to the fact that there's no convincing signs of enterprise tech spend recovery coming in, and the demand trends look very mixed. Where do you stand? What would you pick out if you were bullish on this space?
This quarter in particular for the IT services will remain weak, because the way the macroeconomic uncertainties are continuing in US, there is going to be an impact on the discretionary spending. So when it comes to the large cap IT firms, I think the quarter on quarter growth is going to be deteriorating, and the average growth could be somewhere around about 1.5% or thereabouts, with some companies reporting even negative quarter-on-quarter revenue growth. For the mid-cap companies, the growth would be slightly better, but one would really have to take a very company-specific view. I think in terms of the valuations, because of the kind of underperformance that we have seen over the last almost 15 months, there is going to be a comfort, but one should really look to buy into it when you see initial knee-jerk reaction when the company announces the numbers. Because I think the underlying growth potential is something that we need to assess before we really kind of take a broad call on the company.
Flip side though, there were names like a Delta Corp, something like a Spandana Spurti, or even a Siemens that were rather tempered in yesterday's trading day. Hemang, curious to get in your thoughts. What's the outlook on the cap goods space, the likes of a Siemens, etc.?
I think within the cap goods space, I think what stands out for us is L&T, because of the recent business updates and the fact that this open offer which got concluded, the floating stock from the retail side has reduced considerably, and different business verticals are showing good traction. So L&T would be the number one pick, and apart from that, I think the sector may go through a little bit of correction, and depending on how the quarterly numbers pans out for companies like Siemens, ABB, and whole host of mid-cap companies, one should be able to kind of take a call based on the inputs. But overall, we think that the capex cycle is surely looking good, and typically in an election year, these companies and these sectors tend to do very well. So one should have a positive bias on these names.
Hemang, clearly, it's PSUs which across the board have seen the maximum gains, right? The PSU index has been the one which has held through the market volatility all through the month of September and even right now. Which pockets within PSUs are you most comfortable with in deploying fresh money right now on the market dips?
I think when it comes to PSUs, there are diverse sectors and companies. So I think it would be prudent to really look for some of the smaller PSU banks like UOB, Can Bank, Union Bank, Bank of India, because the recent inclusion of India's weight increase on the JP Morgan bond index, there is going to be some impact on the bond yields, and the PSU banks will be the biggest beneficiary of that. Apart from that, you're seeing a good traction in the operating parameters, loan growth, asset quality wise, they are better placed, and the valuations also continue to be around 0.6, 0.8 times. So this is one pocket which we would be most comfortable with. As far as other sectors are concerned, I think it would be prudent to kind of look at each company. Like for example, defense and railways have really run up big time, and I think the valuations are far beyond the comfort zone. So not too comfortable entering into those names at this stage.
Okay, the IPOs that we have seen, and there have been quite a few, which are the ones that you like or still think that there could be some value on the table?
I think JSW Infra definitely looks quite interesting. Given the presence it has, the port and port infra, and the kind of order book and the growth visibility that it offers. Though it is not exactly cheap, but typically when it's a new company, people are willing to kind of give a slightly higher valuation for a certain growth delivery that the company could possibly give. So JSW surely looks good. We used to have a positive bias on the other cable company, which got listed, but I think it has run up quite a lot now. So I think we should wait for some correction, over there. But overall, I think the IPO space continues to look good. You will have certain interesting pharma companies which will get listed. I think it is on the SME side, Valiant Pharma, that also is looking quite interesting. So I think despite the fact that we're seeing a bit of a challenge comes to the index and the global markets, I think the broader market and the IPO part of the business will continue to see good action.
That was about the pharma space. Of course, JSW infrastructure looks quite interesting. But Hemang, did you get get the time to go through the numbers of Avenue Supermarts, the update that they have come out with? There is some sign of improvement from here on. The valuations are very cheap, below 60 times, and I'm calling it cheap just by its own historic average here. Do you think the institutional investors will be flocking back to this one?
I surely think so, because the revenue per square feet, which remains subdued in the recent past due to the addition of the large store size and the weak discretionary spending, there is some degree of pickup over there. And we think that, and these valuations down, the comfort will not be much, but for, somebody who's delivering and where there is a decent amount of growth visibility because of the higher store addition, I think it would make sense to add into Avenue Supermarket at this price for a maybe 15 to 18% kind of an upside.
Kunal, is that
On all of these QSR names, this morning, of course, there were headlines talking about how Domino's has reduced the prices up to almost 50% on account of this entire volume uptick that they're expecting on account of the World Cup as well. There's a note today from JM Financials talking about how Zomato is expected to show a modest improvement in operating performance in Q2. Do you think this is all priced in, or there's still some upside?
Surely think that there's going to be a significant upside for the QSR names, particularly Jubilant Foods, Devyani. These are the two names where we have a positive view. And aside of the World Cup, where there's be some amount of traction on the business, I think the core story, the penetration, the kind of upside that we are seeing because of the traction of the festive season, there's going to be a lot of interest in this theme. So I think one should surely buy into it, and also the quarterly numbers which these companies will deliver. I think there is going to be a significant surprise versus the consensus. So we continue to have a positive bias there.
Hemang, on that note, we'll let you go. Just wanted one clarification. You said Devyani, and which was the second stock? Was it Jubilant Foodworks, Hemang?
Jubilant.
Okay, got
Jubilant.
it. Got it. Jubilant Foodworks being the other one. Good to speak with you
And
on the
good
show. Thanks so much, Hemang, for taking the time out. Let's move on.